Hey, I'm Jason Fox with John Scott Real Estate. And did you know that interest rates have actually gone down almost a full percentage point this last month? You'll find out more in the Snohomish County Housing Market Update Report for December of 2022. But before I get started, could you do me a favor and click the like button if you like this content? Click the subscribe button if you want to stay up to date on new posts. So, to determine the health of the Snohomish County housing market, we like to take a look at three key indicators. The first one is the sales activity intensity scale, and that's a mouthful. And what that measures is the percentage of new listings that come on the market that go into the pending or sold status, and that percentage is 41.4%. So that is considered a strong market. If you look down at the scale, you'll see between 30 and 40% is strong. If we were 40 to 50%, that's very strong. And then healthy is 20 to 30%. So we'd say that healthy at 30% is sort of a median market, meaning it's not either a buyer's market or a seller's market. So at 41.4%, we're in a strong, and we're going to consider that a seller's market. Now, a lot of the buy signals are leaning towards the buyers, and so we are kind of, leaning that direction, if you will. But technically, we are still in a seller's market. The second thing we want to take a look at is the interest rates. And I kind of touched on that in the beginning, but last month when I did this report, we were at 7.09%. And this month we're at 6.29% at the time of this report. So almost a full point drop. So that's great news for buyers. Now, we can leverage that even further because we are, kind of hedging towards being a buyer's market. Oftentimes we'll be able to negotiate on our buyer's behalf, getting a discount in price, and also or some seller concessions to maybe help with the purchase. And what we can do with those seller concessions is use them towards buying down an interest rate. So this is different than an ARM or an adjustable rate mortgage, but we can do a temporary buy down, which is like a 3-2-1 buy down or a 2-1 buy down, or we can do a permanent buy down, meaning that we can just pay a fee and get the percentage or the interest rate lowered for the full 30-year term of the mortgage. Now, if we take the permanent buy down and apply it to this new lower rate, we might even be able to get you down into the fives. And the third thing we want to look at is the inventory level. And that will also kind of help determine where we're at in terms of the strength of the market. And so right now in Snohomish County, we have 2 months of supply. That's considered to be low. And if we look down at the scale, again, we'll see that a shortage is between 1 and 2 months, and low is between 2 and 3 months. So we're right on that borderline of a shortage versus a low inventory. So, and then you can see between 3 and 4 months is what we call healthy or a median market. So that would be where we were neither in a buyer's or a seller's market. So at 2 months, we are low. That is again indicating that we are still in a seller's market, although again, we're sort of leaning towards the buyer side. What we're seeing is that a few 6-8 months a year ago, we were seeing inventories in the 0.2 months of supply, and now we're at 2 months of supply. So even though we're 10 times more inventory than we were, which it seems like a ton, and it is, we're still technically considered low. And so that's sort of what's keeping the prices anchored down. And although we are seeing the average sales price also start to trend downward, and that's also a little bit misleading, because with the average sales price, what we had happen at the beginning of the year is we saw such a huge spike, like an abnormally high spike, even for the different seasons. And so we went up really high, and now that we're coming back down, so now it feels like we're losing all this equity, or home prices are really coming down. And what's really happening is we're just sort of leveling out for the year. As the time of this report, I think we're at about 0.05% year over year increase. So we'll probably end the year about even. So that's again sort of pointing out this median sort of middle of the way road. Although things are really good for buyers, like increased inventory, selection, the ability to keep your contingencies, oftentimes being able to negotiate a lower price or some seller concessions. All these things are really good, and that interest rate coming back down, that helps a lot as well. We still are technically in this seller's market. So for sellers, we're selling, pretty quickly, not as fast as it was. For a while there, every house that we put on the market, we were like, it's going to be sold in 5 days or less. Now it's, taking a little bit of time, but still, in the grand scheme of things, pretty quick. And that inventory level is really holding everything down. And as long as we don't have enough supply for the pent up demand, we'll continue to see the prices hold and homes selling, reasonably quickly and for a good price. Thank you.